On June 9th, a single research report wiped billions of dollars off the optical networking sector in one trading session. Coherent dropped 11%. Lumentum fell 8%. Marvel lost over 7%. The target was a technology called co-packaged optics, CPO, the next generation method of moving data inside AI data centers by building the optical connection directly into the chip, instead of plugging it in from the outside. The report said CPO was delayed, possibly by years. 5 weeks later, TSMC's CEO stood up at the company's quarterly earnings call and said the opposite. The report came from SemiAnalysis, an independent semiconductor research firm that has become one of the most influential voices in the chip supply chain. To give you a sense of that influence, at GTC 2026, Jensen Huang named only 2 people during his entire keynote. One of them was SemiAnalysis's founder. On June 9th, SemiAnalysis published a report titled Powered Down Lights Off and sent it to institutional clients. The core argument came down to one piece of math. Here's the problem. A CPO switch like Nvidia's Spectrum 6 requires 32 individual optical engines, each one soldered directly onto a single chip substrate. Every engine has to work, and unlike traditional pluggable optics, where a failed module can be pulled out and swapped in seconds, a CPO engine is permanently attached. If it fails, the entire assembly is compromised. Think of it like a chain of 32 links. Each link is strong, 95% reliable on its own. But the chain only works if every single link holds. Break one and the whole thing fails. Multiply 0.95 by itself 32 times, and you get roughly 0.1 in. A 19% system yield, meaning 4 out of every 5 finished switches would fail quality checks. That number, 19%, hit the market like a shockwave. If fewer than 1 in 5 CPO switches survives the production line, mass deployment isn't happening in 2026 or 2027. Maybe not until 2029. But there's a critical problem with that math. It freezes yield at a single point in time. It assumes no improvement along the learning curve, no component screening before assembly, and no redundancy in the design. Nvidia's Spectrum X architecture actually includes spare optical engines built into each module. A single engine failure doesn't necessarily kill the switch. And yield in semiconductor manufacturing is never a fixed number. It's a curve. Every week of production data pushes it higher. The question was never whether 19% is the yield today. The question is how fast that curve climbs. On the very same day the report dropped, Nvidia pushed back publicly. Gilad Shainer, Nvidia's senior vice president of networking, stated at Computex that CPO is, in his words, the most exciting technology right now, and that related products are already shipping, with the ramp expanding in the second half of 2020. One side said delayed, the other side said shipping, same technology, same day. For 5 weeks after that sell-off, the market waited for the one company that could settle the debate, because it's the one that actually builds the thing. TSMC's COUPE platform, Compact Universal Photonic Engine, is the manufacturing foundation for CPO. It uses TSMC's chip stacking technology to place an electrical die directly on top of a photonic die. That shrinks the signal path to millimeters and cuts power consumption dramatically. Both Nvidia and Broadcom rely on COUPE for their CPO roadmaps. On July 16th, at TSMC's second quarter earnings call, CEO C.C. Wei confirmed it. COUPE is now in production. Capacity is expanding, and Wei expects it to become an important revenue source over the next few years. The scale of that expansion is significant. According to publicly reported industry data, TSMC's photonic integrated circuit capacity has gone from roughly 500 wafers per month to an expected 10,000 wafers by mid-2026, with plans to exceed 25,000 by 2028. That's more than a 30-fold increase in under 3 years. You don't scale a production line 30x for a technology you think is delayed. The upstream supply chain tells the same story. Laser suppliers have reported that Nvidia's orders for high-power continuous wave lasers, the light sources inside every CPO module, climbing from around 40 million units early in the year to approximately 100 million by spring, a 2.5-fold increase in months. Lumentum has publicly confirmed its largest purchase order ever for external laser small form factor pluggables, with CPO-related orders valued in the hundreds of millions of dollars. And the earnings call itself gave the financial backdrop. TSMC's second quarter revenue hit $40.2 billion, up 36% year over year at the top end of guidance. Gross margin reached 67.7%. Net profits surged 77%. The company raised its full-year revenue growth outlook to slightly above 40% and increased capital spending guidance to 60 to 64 billion. This is not a company hedging. This is a company accelerating because its customers are pulling harder. Here's the core tension. Both sides of this debate are presenting real evidence, but they're talking about different stages of the same process, and the market is only now learning to tell them apart. Between a technology existing and a technology being deployed at scale, there are four distinct milestones. First, without entering production, the manufacturer can build it. TSMC has confirmed COUPE is here. Second, shipping to select partners. A small number of units go to lead customers for real-world validation. Nvidia has confirmed this is underway. CoreWeave, Lambda, and Oracle Cloud are among the first adopters. Third, customer qualification. This is where the cloud provider runs the hardware in its own data center, testing reliability, failure rates, serviceability, power draw under actual workloads. And this is where the hard questions live. Bernstein noted in a report earlier this year that cloud providers have deep concerns about CPO serviceability, because when an optical engine fails inside a CPO switch, you can't just swap it out the way you can with a pluggable module. No major cloud provider has publicly committed to large-scale CPO deployment in 2026 or 27. Fourth, mass deployment, hundreds of thousands of units per quarter. Revenue at scale. The sell-off on June 9th happened because the market collapsed at all four stages into a single binary. CPO works or it doesn't. But the reality is more layered. Stages 1 and 2 are clearly underway. TSMC confirmed it. Nvidia confirmed it. The upstream laser orders confirm it. The supply chain is not behaving like a technology in trouble. But stage 3, Australia, customer qualification, remains the gatekeeper. And that gate depends on solving real engineering problems. Insertion loss above 3.5 decibels was publicly reported on Nvidia's Spectrum 6, enough to consume the entire optical link budget, meaning the signal arriving at the receiver is barely usable. Serviceability, the inability to hot swap a failed engine, remains an open concern for operators managing hundreds of thousands of servers. These are not trivial issues. SemiAnalysis pointed at stages 3 and 4 and said, this is going to take longer than you think. TSMC and Nvidia pointed at stages 1 and 2 and said, we're already here. Neither is wrong. They're measuring different things. Right now, the supply chain is spending real capital on CPO. TSMC is scaling COUPE capacity by more than 30x. Laser orders have more than doubled. Lumentum is booking its largest optical orders in company history. But the ultimate buyers, the hyperscale cloud providers, who would deploy CPO at a scale that moves earnings, have not publicly committed. The gap between we can build it and they will buy it at scale is exactly where the entire optical sector's valuation sits today. Which side of that gap closes first? The engineering problems that give buyers pause, or the buyer commitment that gives the supply chain confidence to keep scaling, is still an open question. And the last 5 weeks have made one thing clear. In this part of the market, the answer can shift in a single trading session.